The livestock complex was mostly lower this morning. As I mentioned earlier, traders in the cattle complex tell me the market is extremely oversold and this sell-off has been exhaustive, but there isn't a clear indication of when the selling could subside. The week ending January 9th, I reported how much of the cash trade was done early in the week as packers seemed willing to further per head losses with a 170 average cash trade. Cattle traders tell me that some of the majors have been attempting to drive up futures prices to liquidate a long futures position, a move that they tell me helped their margins in the last few years. So basically, packers bid up the cash, futures rally, and they turn around and liquidate, taking profits. However, there were fundamental traders that bought that February contract early that week on the sharply higher cash, but futures did not rally. In fact, this is when we saw heavy liquidation and limit down moves. That same week, I reported that sources told me a lot of the actions by packers would continue to be demand driven, and that once wholesale values began to fall, it was likely that packers would then decide when the top is in. Wholesale values closed lower yesterday, are lower from the week prior when packers traded cattle $6 lower, and analysts expect beef demand to continue falling. In terms of lean hog futures, futures were mostly under pressure as well this morning as the February contract broke below yesterday's low. Higher cutout values supported by recoveries in hams and bellies did little to support the market. The drop in cash and more than ample supply are what market participants are focused on. Funds are still long over 30,000 contracts, and traders tell me that funds continue to liquidate their positions, and some anticipate another $4 to $5 drop in nearby futures. Back to you.